Hello everyone, in the current video we will work out the problem of company final accounts. One Usmania University question. We'll work out this problem and we'll see the procedure how to work out the problem of Usmania University company final accounts, the problem. So we'll read the question. From the undermentioned trial balance of Encore Limited, prepare profit and loss statement for the year ended 31st March 2005 and the balance sheet as on 31st March 2050. And we have information like premises, purchases, salaries, plant and machinery, sundry debtors, wages, rent, bad debts, and we have stock, that is opening stock. Then we have income tax, then we have dividends, then interim dividends, then insurance premium we have, then cash at bank, cash in hand we have, then sales, discount received, transfer fee, general reserve, sundry creditors, P&L account statement, opening balance, that is 1/4/2014 balance 40,000, and the share capital 10,000 ordinary shares of rupees, that is equity shares of rupees 10 each, 1 lakh. And when you see the adjustments, we have depreciation and plant and machinery 10%. So we tick the adjustment depreciation which is there in the plant and machinery, tick the plant and machinery. And stock on 31st December, this is a closing stock we have. And provision for doubtful debts and sundry debtors 5%. So tick sundry debtors, there is an adjustment. And transfer 5,000 to general reserve, that we will do while preparing reserves and surplus. And the salaries outstanding, so we will tick the salaries. So once we read all the adjustment, we'll proceed with preparation. As you are already aware, I have discussed the format in my earlier video. I will share the link in the description box. You can watch the earlier video to understand the format of financial statement, right? So the first format we will prepare first. So the format says that first we'll prepare profit and loss account, right? Format which is as per the schedule 3 of the Companies Act 2013, right? So part A, this is the form of the balance sheet, right? So you need to write part 1, form of balance sheet. Part A, form of balance sheet, right? So company name, what is the name of the company? In the current question we have given the name of the company Encore Limited, right? So first we will draw the balance sheet format, then we will prepare the income statement, right? So balance sheet first. Name of the company is Encore Limited as 8/31/2015 in the question, right? So then particulars, this is note number and this one is amount, right? Then profit and loss account, form of statement of profit for part 2, under that form of statement of profit and loss account of statement of P&L account, profit and loss account I have written, right? I have written. Then same we need to write particulars, then note number, then amount, right? So this is the way you need to write the format. So then we'll prepare the format of balance sheet. Under that, first one is first is equity and liabilities, and liabilities, right? Under that, first one is shareholders fund. First we are preparing balance sheet, then we'll prepare P&L account. In the sense, simultaneously we prepare. Then shareholders fund. Under that, A, share capital, B, reserves and surplus, right? Then money at call and short notice is not required. Then directly I'll proceed to the next one, that is non-current liabilities. Under that, if any items comes, we will write. Then third one is current liabilities, right? Under current liabilities, whatever it comes, we will write. So under current liabilities, we have, when we read the question, we came across trade payables, right? So trade payables we will write. Next, after the trade payables, we will close this. So we'll get total of the liabilities here, right? And one more is other liabilities, even other liabilities, right? So then we'll make the summation. Then we write assets, right? Sorry, under assets, first is non-current assets. Under that, fixed assets. Under that, we have tangible assets. Then we have intangible assets, right? Then investments. As per the question, we don't have any intangible assets and investments, hence we'll directly go to the current assets. So under current assets, we have inventories, then trade receivable, and we have cash and cash equivalents, right? Cash and cash equivalents, right? Then we'll make the summation. Clear? Then when you come to the what we called income statement, so under that, first one, Roman one, is revenue from operations. Then Roman 2, other incomes, then summation, right? So we'll get Roman 3, then total revenue or income, then we have Roman 4, expenses, right? Under expenses we have purchases, then change in inventory, then we have, after change in inventory, then we have employee benefit expenses, that is employee benefit expenses, then we have depreciation and amortization, let's put a shortcut here, then other expenses, then we have other expenses, right? So other expenses, then make the summation, so you will get total expenses, then so we don't have exceptional items and extraordinary items, right? So we write directly profit, so this is 5, we write profit before tax, tax expense, then profit after tax, right? So like this we have drawn the format, right? So once you draw the format, right, and we'll take a next page where we will prepare all the notes. See, the notes are very, very important. So we write notes to accounts, under that. So note 1, share capital, right, leave some appropriate place based on the number of transaction. Then note 2, reserves and surplus. So we have some calculational part, therefore we leave some little bit more place here. So and then reserves and surplus. After that we don't have any non-current like assets, non-current liabilities in this. So therefore we'll proceed to the current liabilities. Under that current liabilities we need to prepare individually. So under current liabilities we have written trade payables and other current liabilities. So note 3, trade payables, then note number 4, that is other current liabilities, abbreviation I have written. Next, when you come to the asset side, we have fixed asset, that is under that we have note number 5, tangible assets, right? Then we have current assets. Under that current assets we have inventories, right? So tangible assets we write here, right? Then we have under current assets we have inventories. Sorry, I have to write note number 6, right? Under that inventories, leave some place. Then we have trade receivable, so note number 7, trade receivables, right? So trade receivables. Then note number 8, cash and cash equivalents, right? Then once it is that revenue from operation I'm not writing because sales is directly given. When you come to the revenue from operations directly given, other incomes we can make other incomes, right? So note number 9, other incomes, right? Then total revenue expenses, under that purchases is direct given, change in inventory we write to make you understand. That is note number 10, change in inventory, right? Next one's change in inventory, then employee benefit, then depreciation and other expenses. So we write here so here we'll extend the place for required notes, right? So it's not a great deal. Then the notes are very important for the financial statements. Then change in inventory, then once change in inventory, then employee benefit expenses, note number 11 we are making employee benefit expenses. Then we have depreciation and amortization and other expenses. Then we have note number 12, depreciation and amortization. Then we have note number 13, other expenses, right? So like this we have drawn all the notes, right? So once we have drawn everything, we will proceed with the questions without any further delay, right? As we have already read the question, we will put wherever a particular item comes, right? Now first, freehold premises. Freehold premises is a tangible fixed asset, right? So for that we have prepared a note. So tangible asset here, right? So we will write here freehold premises. So freehold premises is 90,000. Directly we are writing under tangible asset freehold premises, right? 90,000 we have written. Then after freehold premises we have purchases, right? Purchases, for that we did not make any note number, so directly we are writing in purchases, So for purchases we have written here directly. So how much is the value of purchases? Purchases is 75,000, right? So once we write purchases, we have next item is salaries. So the next item is salaries. Salaries 30,000 and there is an adjustment. The adjustment is the salaries outstanding 2,000. So salaries is a employee benefit expenditure, so it will come under the category of employee benefit item. So we have created employee benefit. So salary 3,000 plus 2,000 should be added as outstanding, right? So collectively it will be written 5,000. This 2,000 is outstanding, right? We have added. Due to the paucity of place, I am using horizontally, not vertically, so you can understand. So this outstanding expenses should be recorded as a liability. Under which liability? Should be recorded under other current liabilities. So outstanding salary, that is 2,000. Clear? So this item is done. So we'll come to the next item. After salary we have wages. Wages is also employee benefit expenditure. Wages, sorry. After salary we have plant and machinery. Plant and machinery, tangible asset 40,000 and there is a depreciation on tangible is 10%. So plant and machinery is a tangible asset. So we write under tangible assets plant and machinery 40,000 minus depreciation is 4,000 at the rate of 10%. So we write 36,000, right? And this 4,000 depreciation should be written under which note number? The note number we have created for, that is depreciation and amortization, note number 12, sorry. So depreciation on plant and machinery 4,000, right? Once it is done, we'll come to the next item. The next item is debtors 22,500 and there is an adjustment. So provision for doubtful debts is at 5%. So first we need to write debtors. Debtors comes under which category? Debtors comes under trade receivables. Trade receivables. So we'll write first under trade receivables. Did we prepare any? Yeah, we have prepared trade receivables. So under that we write debtors. So 22,500 minus 5% of 22,500. So 22,500 into 5% is 1125. We will deduct. We will write 21,375 outer column, right? So this 1125, what is this 1125? It is the bad debt. So bad debt should be debited to profit and loss account, right? So under expenses, then which comes under which category? So this bad debt 1125 should be written in other expenses. So other expenses we are writing bad debts, that is 1125, right? So other expenses 1125 I have written as a bad debt expenditure. Next, this next item is after debtors we have wages is an employee benefit expenditure. Then rent will come other expenditure. Bad debts again we have given, it comes under other expenses. Then stock, right? This is opening stock. So I'll take up this items directly. First wages. Wages is an employee benefit. So did we? Yeah. So here wages, amount of wages here is 5,000, right? Then after wages we have rent. Rent is other expenditure 1,800. After rent I have shown you bad debts already, right? So bad debt, the earlier one was the provision, now it is directly bad debts 250, right? Which all comes under the other expenses, right? Once the bad debt is given, is done, sorry, we have stock. This is opening stock. and this one is the closing stock 18,000. So what we have to write? We have to write change in the inventory. So opening stock is 10,500 and closing stock is 18,000. So for the change in the inventory, we have prepared one what we call note. So where it is change in the inventory. So other expenses, then yeah, change in the inventory here we have prepared. Then opening stock. So we have opening stock comes to how much? 10,500 minus closing stock. Closing stock is 18,000. So 10,500 minus 18,000, resultant figure is 7,500. Negative, I need to write 7,500, sorry, negative balance, minus balance we need to write, because we are getting closing stock is more. So therefore this closing stock should be recorded one more place. Which area? Under the asset side of the balance sheet. Under asset side, which side we need to record this? That is tangible assets. Then we have recorded inventories. Under inventories, closing stock 18,000 should be written, right? So like this we are completing the double entry. So once this inventories is done, then income tax. So for income tax, we have kept a particular place for income tax in the directly our income statement, that is tax expenses 12,000, right? This is a minus symbol. Clear? So directly in the format of profit and loss account, I have written income statement, that is 12,000. So once this 12,000 is done, income tax is done, then dividend, interim dividend. These two items will comes under the reserves and surplus, right? So reserves and surplus, here what we have to do, we have to take some calculations. As I told you, we'll take opening balance of profit inner column, right? Then add current year profit. From this we will deduct interim dividend and one more dividend paid. Two we have given dividends. So interim dividends, how much it is given? Dividend is 13. Dividend is 13,000. Then interim dividend we have given 8,000. Sorry. So this both will be deducted from this, right? Then resultant figure will be written in the outer column, right? So we might be having one more item regarding general reserve, I hope. So I'll write general reserve here under reserves and surplus. Clear? I hope I might be making you understand. So it is a little bit lengthy, but you can easily do this problem, right? So once interim insurance premium. Insurance premium is an expenditure, comes under the category of other expenses. So insurance premium. So insurance premium is 90. So we are writing 90 as insurance premium. Then next is we have cash in bank, cash in hand. These two are cash and cash equivalents. So we have prepared note for the cash and cash equivalents. So here cash at bank and hand both collectively. So cash at bank is 7,500 and cash in hand is 2,960. So inner column or directly you can write in the outer column also 7,500 or 2,960, right? Both I have written cash in hand, cash at bank. Then we have sales. Sales directly will be written. For that sales we did not prepare any note because only one item we have. So under revenue from operations we will write sales. So what is the value of sales is 1,35,000, right? So once the sale is done, we have discount received 1200. Discount received is income for us. Then which kind of income? Other income. So discount received. How much discount received is 1,200. Then we have transfer fee is also other income. Fee other income, that is, I will show you once I write. So this is 150. Right? So we have done with discount received and transfer fee as other incomes will be written in the other incomes. Then general reserve. General reserve already we have written. General reserve 5,000 will write here inner column. Next we have some adjustments with regards to the general reserve. And sundry creditors. Sundry creditors is a current liability. So under trade payables it will come. So we have already prepared trade payables, sundry creditors. So what is the value of sundry creditors? 10,250. 10,250 sundry creditors I have written. Then once it is done, sundry creditors, the most important item is balance in profit and loss account is 40,000. Share capital is 1 lakh. So share capital we have prepared the balance in P&L account, that is opening balance is how much? 40,000. So we have prescribed place here 40,000. Then share capital, under share capital, so 10,000 equity shares of rupees 10 each, that is 1 lakh. Right? So share capital is done. Once the share capital is done, we have done with all the items of trial balance with simultaneously posting into the double entry with adjustments. Then come to the adjustment once again. Depreciation we have done, closing stock entry is done, provision for doubtful is done. Transfer 5,000 to general reserve we did not consider right now, we will do this treatment. Salaries outstanding we have done, right? So transfer to 5,000 to general reserve. So what we have to do, this transfer to general reserve should be deducted from here, minus 5,000 from the current year profit. Transfer to GR. So once you deduct this transfer to GR here, plus 5,000 will be added here because general reserve will increase. So what is happening, from the profit 5,000 is deducted towards the general reserve, and this amount will be added again in the reserves and surplus to general reserve. So this general reserve summation comes to 10,000. And now we need to calculate the current year profit to complete this, right? So once this is done, right, we will close whatever we can possibly close, right? Now we are left with only one, that is profit is needed. Hence, leaving this reserves and surplus, every note we will close. That is, first one is 1 lakh share capital we will close. Then we don't touch this reserves and surplus, we will take up later. Then sundry creditor, that is trade payable 10,250 we will close. Then other current liabilities 2,000. Then we have tangible asset, that is 90,000 plus 36,000 comes to 1 lakh 26,000, right? Then next one is next one is we have tangible assets 1,26,000 is done. Now we have inventories. Inventories is total is 18,000 as usual. Then trade receivables. Trade receivable is 21,375 as usual. Then cash and cash equivalents. We have two items of cash and cash equivalents. That is 10,460. So cash and cash equivalents 10,460. Then other incomes, right? So when you come to the other incomes, we have two incomes, that is we have 1350, right? 1350 is our other income. Then change in inventory is 7,500 negative as usual. Then employee benefit expenses comes to 10,000 summation. Then depreciation comes to 4,000, only one item we have written. And under other expenses we have four items. We will make the summation, that is 1125 plus 1,800 plus 250 plus 90. So 32, the summation comes to 3265, right? So this is 3265, we are getting summation. Clear? Once this summation is got, next we will proceed with preparation of first revenue statement. So under revenue statement, that is income statement or P&L account, already we have written sales. Then other incomes. So other income summation we already made. Other income is 1350. Other income is 1350. Directly we'll write 1350 other income. So total income, that is 1350 plus 1,35,000. So the summation comes to 1,36,350. 1,36,350 is the total income, right? So already we have written purchases. Then we have to write change in inventory. Change in inventory we have written 7,500 negative. 7,500 negative. Then employee benefit expenses 10,000. 10,000, just posting the item summations what we did here. Then depreciation and amortization is 4,000. Then other expenses 3265. 3265, right? So once this is done, we will make the summation of this. So 75,000 purchases minus 7,500 is a negative figure, right? So once the 7,500 deducted, then add 10,000, then 4,000, then 3265. The summation is 84,765. 84,765. So with this we got total expenses and total income. So this figure minus this, we will get profit. So minus 1,36,350. So 1,36,350 minus 84,765, we are getting 51,585. So we are getting 51,585. So 51,585 minus 12,000, we will get 39,585. So 39,585 is our profit. So this minus this will get net profit, right? So this is the way we need to do the problem, right? So this is our profit after tax. So this profit after tax should be considered in the our notes to accounts paper. That is how much we got, 39,585. 39,585. Now we'll make the summation. This 39,585 plus 40,000 current year profit. So total is 79,585. Because of the paucity of the place, directly I'll make the calculation. So this two summation minus this proposed dividend, interim dividend and final dividend 13,000. So together we get 58,585 minus 5,000 reserve, transfer to reserve. So we'll get 53,585, right? So this 53,585 is the profit balance. So I'll write 53,585 plus this reserve that comes to 63,585, right? So once you calculate this reserve, then we will go to the balance sheet first. Here we did not mention the note numbers are very important. So right, I'll put again this from other incomes we have. So this is note number 9. Then changes, purchases, we did not make any note. Then change in the inventory is note number 10. Employee benefit is note number 11. Note number 12, note number 13, right? These are the note numbers. Then we'll proceed. Note number 1, share capital, that is 1 lakh, right? Then reserves and surplus, that is 63,585, that we have calculated 63,585, the same value we are plotting here. Then non-current liabilities, we don't have anything. Under current liabilities, this is note number 2. Under current liabilities, we have trade payables 10,250. So note number 3, 10,250 is our trade payables. Then we have other current liabilities 2,000. So other current liabilities is note number 4, 2,000, right? Then we write, next is we have tangible asset is 1,26,000, right? So note number 1, under the tangible asset, that is 5, 1,26,000, right? Once 1,26,000 tangible asset is done, then we have under the current liability, current asset, we have inventories 18,000. So inventories 6, 18,000. Then we have trade receivables 7, 21,375. Trade receivables 7, 21,375. So 21,375. Then cash and cash equivalents 10,460. 10,460. So like this we have written all the items. Then we need to check whether our balance sheet is getting tally or not, right? So 1 lakh plus 6,3,585 plus 10,250 plus 2,000. So it is 1,75,000. 1,75,000. 835. 835 is the summation. Then make the summation. Current liabilities, asset liabilities, we got 1,75,835. Then asset summation, even we are getting 1,75,835. So we could able to tally our balance sheet, right? So I hope I made you understand this procedure. This is a very lengthy procedure. First draw the formats of balance sheet and income statement, then prepare the possible notes and just plot the values, make the summation of notes. Then first prepare P&L, close the P&L, find out the profit, then plot it on reserves and surplus, close the reserves and surplus, then plot in the balance sheet. You will get tally your balance sheet. I hope I made you understand. Do practice more some and try to understand, and do subscribe my channel for sure, and give me some motivation by giving your what we call likes, right? And give comments, and you can ask question. I will be very glad to answer. Thank you.